Hello and welcome to this Luna Quarterly Update. My name is Alex Brandreth. I'm the Chief Investment Officer at Luna. Today we're going to go through and give you a quick update on what's going on within the UK, what's going on globally, and then we'll take a step back and we'll look at what happened in the quarter to different asset classes. We'll have a look at bond markets, equity markets and other alternatives that we invest our client assets in. So we couldn't not start a presentation at the moment and not talk about what's going on with COVID. And thankfully we've got some great news to talk about this quarter, which is different to what we've been talking about in the past, and we've got some tangible evidence in terms of the developments that's been going on in the UK and the US and globally. And this chart shows the global vaccine rollout as a proportion of the population, and you can see there that the UK is miles ahead of other European nations and global nations in terms of its vaccine rollout. In fact, it's been a tremendous success that in the mid-April that the key 9 priority groups have all had at least one vaccination. So protecting those that are most vulnerable. It has been very impressive, the amount of individuals that have been vaccinated every single day. And it's not really a surprise in some ways, in that going back to autumn of last year, the UK had pre-ordered more vaccines per capita than any other country. So the UK was in a very strong situation. They negotiated very quickly with the vaccine providers, and they pretty much picked every single vaccine that was on the market. The key one for the UK clearly being the AstraZeneca vaccine. So it has been a tremendous success, which means that as Europe at the moment is going through a third wave, you're not seeing that in the UK. In fact, cases are falling month on month, week on week, and most importantly, the people that are sadly dying from this disease are also falling as well. So it's fantastic news all round that this has happened so quickly and been rolled out so effectively across the UK. The US has also been a tremendous success in terms of its vaccine rollout. It was a key priority of Joe Biden when he came into office to make sure that happened, and it's happened. Now, clearly, there's been some issues with the EU with regards to vaccine supplies, which have been quite evident in the press, and that has held back France, Germany, Spain, Italy. There, you can see that a percentage of their population is significantly less. And as I mentioned, there is a third wave going on there and in other nations at the moment. So we're in a very fortunate position within the UK at the moment. And that is really key in terms of the economy, because the quicker the vaccine rollout and the successful vaccine rollout, then the quicker that we can get back to normal. And this just shows UK economic growth going back 10 years. And you can see, UK GDP used to be quite boring, was flatlining for a period of time, and then COVID hit, and you hit the heart monitor. Clearly, the first quarter in 2020 and the second quarter were very negative periods for the UK economy and the global economy. It was going through a very similar impact. You had a very strong rebound in Q3, and then you saw Q4 growth was still was weaker because we had the second wave going through then, but it was still positive. And this is key at the moment because we think we're going through a very similar period within the UK economy as well at the moment. You've got this violent downdraft, which is likely to be Q1. That being said, February GDP was actually better than anticipated because we're getting more and more used to being in a lockdown environment. But then you can see the potential what happens when the economy reopens, and it's going to be a very strong surge higher. Some people have been calling this the roaring 20s. It's going to be a period of elevated economic growth to make up for the fact that we've been below trend and see negative falls and significant negative falls in 2020. So we're very optimistic looking forward about the UK economy. And one of the reasons central to that is the UK savings ratio. So this shows how much savings we have as a nation. And you can see, again, this goes back all the way back to 1963. It's quarterly data. And on average, UK savings ratio over this entire period has been at 8%. You can see that it does go through peaks and troughs, so it was slightly higher in the late 80s, early 90s, and it's been traditionally quite low through the 2000 period. But you can see what the impact that COVID had. Now, clearly, we couldn't go anywhere, we couldn't travel, we weren't going to the office, we weren't buying a sandwich. Saving ratios went through the roof. You've also seen individuals paying back debt and mortgage repayments increasing significantly. So the health of the financial situation of the economy has never been stronger. And our view is this is going to be a key driver for the economy as and when it reopens. We are a consumption-based economy. So when we go out and consume more, it's going to be very strong for economic growth. And that's going to be a key driver. And you can see that it's not as strong as it was in the middle of last year. This is the impact of Q3, but it's still relatively healthy because of the impact and the environment that we've been in. Now, do we think it will go back to low levels of 2018, 2019? Probably not straight away. It might take a few years to get there. So it's going to have a significant impact over a few years, which is going to be a positive for the economy. So I'm just going to take a bit of a step back now and just talk about different stock markets and asset markets. This environment is very good for risky investments because investors can see that the economy is going to be reopening and are willing to take more risk. That is clearly a headwind for safe haven assets, and one of the best safe haven assets out in the market is government bonds. When you're a bit more cautious, you're a bit nervous about the market, you want security, and one of the best places to get security is with a government bond. And over the first quarter of this year, government bonds have delivered quite significant negative returns, and that's because individual investors are feeling a bit more confident. They don't need that security anymore. So at the end of 2020, government bonds were, in terms of price terms, were one of the most expensive they've been. We look at it from a yield perspective, and the yield was very low, just positive in the UK. And you can see over the course of the first quarter of 2021, government bond prices have been under pressure, and you've lost on a total return basis around 5% from being in the UK, which is a quite significant loss for an investor investing in government bonds, because the average yield and the return that you expect from a government bond is about 0.7%. So you've lost quite a significant value of your money in just a very short period of time. It's not just the UK that's been impacted by this. You can see the other global government bond markets here. German bonds have delivered a negative return. US Treasuries, again, delivered significant negative returns, even more so than the UK, and Japanese government bonds as well. So globally, investors have been pulling money out of government bonds because they don't want that security anymore, and that's been leading to their values falling. It's not just government bonds that investors look to for safe haven status. Investors also look at gold and silver, and you can see that the gold and silver price have also fallen in the first quarter. Again, as investors feel more optimistic about the economic outlook, they want to have more asset in risk assets and other commodities as well. You can see how strong the oil price has been. You know, if we go back a year ago, West Texas oil, which is American oil price, was actually negative for a very short period of time. Because of the fact that clearly global trade was suffering in that environment. But there has been a resurgence of the oil price over the last few quarters as a reflection of the fact that the global economy is improving. Copper, again, a good indication of what's going on with industrial production. The copper price has also been quite strong. We also invest in equity markets. We've got the major equity markets here: FTSE 100 in the UK, S&P 500, MSCI Europe excluding UK, the Nikkei 225, and then Nasdaq. Again, this is just a quarterly performance, so showing how the different equity markets performed in the first quarter. And you can see that, again, it was a very strong period for the UK and the US. Now, there's probably a few factors behind this. One, the fact that both markets are ahead in their vaccination program. And the two for the UK is the fact that the UK market has been so unloved since Brexit. And clearly we got some certainty at the end of last year with regard to Brexit. So to overseas investors, the UK looks like a better place. On top of that, the UK stock market looks one of the cheapest globally, so there's significant opportunities within the UK market as well. Now, we've also included the NASDAQ, which is the US Technology Index. Technology was the big winner of 2020, and we're doing this virtually, but everyone has had virtual meetings, whether it be Zoom, Microsoft Teams, etc. And technology has been more used than ever, whether it be us consuming and Amazon delivering parcels, whether it be advertising, etc. We've spent more and more time embracing technology over the last year. And it was already a trend that was moving in accelerated fashion beforehand. COVID just moved it even quicker. But you can see there that the technology index didn't really have a very strong period in the first quarter, and that's because the share prices reflected a lot of the growth that you saw in 2020 and have moved quite a long way already. So whilst this is the overall market level, what's interesting is what's been going on below the market as well in terms of what sectors have been leading the way. And there has certainly been a resurgence in some of the more value, the more cyclical areas, so like banks, like oil and gas, like miners, which tend to do well in this part of the cycle as the economy is reopening. And the UK stock market as a whole does tend to have quite a lot of positions and weighting in those sectors, hence why the UK has probably done quite well from that as well. Just on this, I think it's probably important just to talk about Luna's positioning as a firm. And if we go back to the bond market, we had reduced our allocation to fixed income and bonds in November last year, just after the vaccine. We did feel that the opportunities were significantly less in the bond market. So we had already reduced our exposure there, and we have been overweight equities and risk assets because we can see the recovery coming, and we want to have more exposure to risk assets in this environment. So we have been going through a very strong period of performance in absolute terms, and we've been delivering strong positive returns, but also relative to benchmarks as well. Now, we don't just invest in equities and bonds, we do invest in alternative areas as well. And we just picked a few here. We've got commercial property, so buildings around the UK. Clearly, a lot of them have been empty over the last year or so. Not necessarily all, but there's been lower levels of staffing in office buildings, for example, and in retailers. We've also got infrastructure, so different infrastructure funds, which will be either renewable, so investing in solar or wind, and the big blue bar there is private equity. So companies that are not listed on the major stock market are privately held. We can invest in investment trusts, and we have had some very good successes in that part of the market. Private equity tends to have quite a bias towards technology, and you have been seeing an influx of IPOs over the course of last quarter, sorry. And when you get a period of IPOs, it's a realization of capital, and those securities become a lot more liquid. And in doing so, they tend to see very strong periods of performance for private equity in that environment. And that's been a key driver to some of the returns that you've seen over the last quarter. And finally there, we've got absolute return, which has delivered a small positive return. And really, we are looking more in the alternatives asset class to provide that balance within portfolios. We are now, as I mentioned, we're underweight fixed income, so we need to look for defensive elements to protect portfolios, so we're not just invested in equity markets. For a cautious client, that's clearly not an appropriate investment case. So we are falling more into this alternative asset class, and there have been some big successes within the space over the quarter. So that's all from me. A quick update on what's going on with the economy. The economy is performing well. It has done in February. We're getting more and more used to lockdown. The restrictions, we've got the roadmap now. The restrictions will be gradually lifting over the course of the next few months. We hope you're all well and looking forward to getting back to normal life. Stock markets have moved in anticipation of the economic recovery coming through. And just wanted to thank you for listening to this today, and thank you for your time. All the best. Bye now.